Hi, everyone, and welcome to this week's installment of Mish's Market Minute. I am your host, Mish Schneider, and as always, I like to thank StockCharts TV for hosting me. What we're going to do for this week is evergreen, in that this is going to be a lesson on how we have come up with the real motion indicators that you see me show you week after week after week, how they work, a little bit more about the moving averages, the slope of the moving averages, the Bollinger Band, and how the real motion indicators show sometimes convergence with price and sometimes a divergence in price. In essence, giving you a lot of opportunity to make trades well ahead of the curve, because what you can see is something that a lot of people cannot see. It's the invisible indicator of momentum. So we're calling this segment How and Why Real Motion Works. So basically, my goal for you today is to take you through a quick trip through the real motion indicators, how they can be used to alert you to moves in any instrument before the price action confirms the momentum change. And we're going to do not only an evergreen lesson, as I mentioned, but we're also going to take you through a few symbols here. CAR, which is Avis; Gilead, TAN, the ETF for solar; GOLD, GLD; Las Vegas Sands, and Budweiser. So why does real motion work? First of all, going back to when we were first traders on the commodities exchange floor, the whole idea of momentum was something as floor traders we were able to detect before the crowd. And when I say before the crowd, I mean before the public, whether it be institutional investors or just regular speculators. And the way we were able to identify momentum is by using our five senses. We would stand in the pit. Sometimes there would be 30 people in the pit. Sometimes there'd be 100 people in the pit. That in and of itself was a momentum indicator, because if price was sitting at a certain level, but there were less bodies in the pit, that was information. You could also tell by the activity in terms of the noise level and the excitement of the brokers. That told you about momentum. If things got very, very busy, all of a sudden, more people piled in, the noise got louder, and the hands started flying, then you knew momentum was starting to improve. Same thing, if the price was just sitting there, brokers left the ring, all of a sudden people were sitting down, and there wasn't much activity, that too would tell you something about momentum. So we could see it, we could feel it, we could certainly hear it. Luckily, and though sometimes you could taste it when things got really, really busy, but we won't go there. So this is the whole idea, was that we were able to take this real motion that we all understood from the floor as a very, very key secret formula to price. Because now that we can do it in our indicators, we can actually detect these trends before the crowd. Again, before the institutional investors and before the public. So this is really an excellent way to spot leadership, to find divergences that lead to reversals. You've heard me talk over and over and over again through the last year or so about when I find these divergences and when I'm looking now for some kind of either momentum change where the price is high, and the price is going to come down because the momentum has gone negative, or the opposite, when the price is down but the momentum has gone positive. This is, to me, is one of my most exciting ways to trade, because you can get out at tops and you can buy bottoms very easily. They also find compression. So what do I mean by that? Is that when you start to see the indicators of the real motion compress, even if the price has sort of been all over the place, that also gives you good information. So we're looking for specific conditions. We're not trying to predict every single move. So basically, the classic approach of finding a trade and traditional type of analysis techniques is that you buy and sell at a moving average. Something clears a 50-day moving average, clears a 200-day moving average, a 10-day moving average, an exponential moving average, whatever it is that you like to use. That's classic. Clears it, it's a buy. Breaks it, it's a sell. What we do with this improved approach is that we look at that traditional moving average but as a baseline and not a live and die by the sword type of situation, because often the actual moving averages are not respected, but you can see that price will move around them. And so real motion actually is great to be able to tell us about that movement around a moving average and can detect the breakout even before the moving average actually crosses over. I trade off of this all the time. It also keeps me out of trades that are set up really well all the time because I can see the momentum declining even though the price is still looking good. So with this whole idea of real motion, which by the way, again, if you don't already have it, you can get it very easily as an ACB plugin on StockCharts, and that's something that we have. But the longer term momentum charts, that's the one that we like to look at in terms of the weekly and the monthly, identify critical inflection points. The institutions, they like to watch for these longer term trends in order to move large amounts of capital. So very large movements when these trends wind up emerging, you will see that. When the 3 to 4 year price momentum breaks out or down, that's also often an important inflection point and precedes major market moves. We're not necessarily, when we do these weekly videos, looking at 3 to 4 year price momentum breakouts. We're looking at it though, as you have seen week after week, as a 50-day moving average and a 200-day moving average. So let's take a look at the actual construction of the workspace. So you can see all the information here that every week I show you. So the moving average of the price plotted as the zero line right here, that is your baseline line to look at. The real motion ratio equals the current price, so whatever the current price of the instrument is, divided by the average of price. And that's what these brown scatter dots are actually. The real motion fast average that you don't see me use very often, but I'll tell you anyway, equals the short-term average of the ratio. So that's the blue solid line, okay? So this is going to be your 50-day moving average and your 200-day moving average. The real motion slow average, which is the green line, is the long-term average of the ratio, always set to the same interval as price moving average baseline. So in other words, the moving average colors change based on length to be consistent. So 200 is green, 50 is blue, and 10 is magenta, but you're not going to hear me talk about that when it comes to the real motion. So once again, just to review, the brown scatter dots is the ratio of the price divided by the average of price. The blue solid line here is the fast moving average, so it's the short-term average of the ratio of the current price, and the green line is the slow average ratio or the long-term average ratio. So when you put this all together, you can see basically how these indicators work. So now we also have here a regular chart of the SPY and then the real motion chart of the SPY. So you can see on this one, we have the 50-day moving average, which is blue. The green is the 200-day moving average. The magenta is the 10-day moving average. I don't often show you that. We also have Bollinger Bands that we don't use that much, but they basically, I use them on the real motion, but I use them on a monthly chart in my own personal workspaces. But you're going to see them here. These are two standard deviations. Now here is your real motion chart. So it plots the percentage of movement from the baseline. So that's the red dots right here. The fast real motion indicator uses the short-term moving average. There's your blue line here. The baseline real motion is measured by the average of the ratio. That's your green line here. Now here, we like these Bollinger Bands for the fast real motion indicator, and we use a 1 standard deviation. So in terms of looking at the workspace right here, this just sort of gives you the whole information on terms of our inputs. Not information that you really need to know because you're not creating them. They're already given to you. But you can see the close-up data 1, the primary moving averages, the slow and the fast. We use the closing price, the flat line, and the deviations on the Bollinger are 1 and -1, 1 on the up and 2 on the down. So the key relationships in this data is that the current reading of the current real motion versus the two moving averages and the baseline. We look at the slope of the two real moving averages and the relation to each other. What is the current reading of the real motion indicator, one standard deviation versus the two of the moving averages, and has the real motion respected the baseline? What is the slope of the indicators and the relationship of the indicators to each other and underlying price in their moving average? So you can see here with the SPY, when everything is lined up, when you have the Bollinger Bands lined up here with the moving average, and you look at the same time at the real motion indicators, what we're looking for is basically what the average price is, what the fast indicators are looking at, the slower indicators are looking at, the width of the Bollinger Bands using that one standard deviation, and how that relates to the actual price. So you can see in this case, there was no real divergence because it was over the 50 at the same time the price was, and as the price started to decline under the 50, so did the momentum indicators. Same thing here if we move forward. As the price was starting to clear the 50-day moving average, even though we had now a good move under the baseline, so did the price start to clear on the 50-day moving average here. You could see that there was, when there's a huge width between the Bollinger Bands, that's also good information. It means a bigger move could be coming. And then once we cleared the 200 here in momentum, we had not quite cleared here on the price chart. So the momentum here started to improve before the price did. After these huge big swings and a gap over the momentum Bollinger Bands, that was a good indication. And then as you can see here, once the cleared the baseline and this cleared the 200, it was off to the races. So let's go talk a little bit more about these Bollinger Bands because I often refer to them, but I haven't actually really explained them. So the basic Bollinger Bands on real motion use 20 periods and a one standard deviation. So you want to ask yourself, are the bands expanded? Is the price near a band? If the price has exceeded outside the band, it should continue to trend in that direction, and correction should hold the midline or that baseline. So it's used to quantify compression, because if the Bollinger Bands get really narrow, that shows compression. If the upper band is below or above the baseline, it can identify trending and potentially overbought or oversold conditions. So in terms of the overall time frame and the trade duration, we look at, for day trading and for swing trading, 50 days and 200 days. If you're looking to be a longer term trader, which is not generally what I'm doing with you when we're looking at our stock charts picks every week, but if you're looking to do that, you might look at a 50-week, which is an annual, obviously 52 weeks in the year, or a 200-week, which is a 4-year cycle, or an 80-month moving average, which is actually a full economic cycle. Now, I often will switch charts when I talk to you to show you the weekly chart so that we can see these other moving averages. But when it comes to real motion, we really try to stick more to this data swing trading momentum here, indicators on a short to intermediate time duration. Okay, so although this is traditional and standard and evergreen, I thought it would be fun, even in an evergreen video, to show you a few trades that set up. Doesn't matter what week it is, it's more about the setup that showed both a divergence for a long and a divergence for a short. So the first one here is Avis Budget Group. So what happened with this is that you can see that right here, this is the part of the divergence here, is that we made a new high. At the same time, we made a new high in momentum. And then even though it broke the Bollinger Band and came back through, look what happened on the next wave. The high and the price was higher, while the wave here was a little bit lower. However, what we have here is that we're hanging on to the Bollinger Band. So basically, this is showing right now that you have a chance, with the price being higher than the momentum, for the momentum to catch up and take out these recent highs and keep on going. I generally like to look at this on the fact that if we make a new high, but we haven't made a new high in momentum, you sometimes want to wait for some type of tick up in the momentum. But if you decide that you want to do it anyway, with the Bollinger Bands being pretty wide and you can see it holding the Bollinger Band, and of course we are also well above the baseline here, or the zero line, then you would use old-fashioned charting. Of course, we're far from the 50 here, but in this case, you can see there was a big expansion day, an inside day, and then another inside day following suit. So another example of how in this case, the momentum indicators actually were really showing us that Gilead, for example, was getting ready to take out its moving averages, can really go back to down here where we started to see the momentum. Notice the compression here, not only of price, but the compression here of the Bollinger Bands. We broke down briefly above, so we needed some other strong signal. And look how well, so you could see the compression here, then look how well the breakout happened just the same time momentum took out the 50, so did the price take out the 50. And actually the momentum preceded it by a couple of days, so that should have been giving you your heads up on this. You could have actually gotten long a stock like this somewhere at around 58, 59, and looking at it at the current time I'm showing you this at 66.71. So why is this still interesting potentially? Because after this took out the 200-day moving average, once again now we were exceeding the Bollinger Band, we were exceeding the baseline. Notice how long this sat under the baseline right here. So now, if you may have not wanted to chase it at this point, because you can see that at this point now, maybe your risk was less. Or let's say you did chase it and you wound up having to find a stop, you would have gotten stopped out here and the momentum indicators went under the baseline. So you can also use that as, gee, it broke the 200-day and it broke the baseline again. Maybe this trade isn't going to work. But if you were just a little bit more patient, when this broke the 50-day moving average substantially, this barely broke the 50-day moving average right here. And then when it came back over not only the 50, but the 200, look at this day. Look how tight you had an opportunity to try this once again, sitting on now an upward slope 50-day moving average. And then here we are, and the price and the momentum increasing, and it's now substantially clearing that baseline line, and we have a new high here in momentum, even though we haven't gotten up to this high yet. So this shows that we still have good potential in this particular trade. But it also shows you how we're using the Bollinger Bands, the compression, the price dots, the moving averages, and the slopes all together to find these good trades, matching it with the price, and how this absolutely gave us the heads up even ahead of time. Now, another one is TAN, which is an ETF for solar energy. This is a very interesting to me because if you go back now and take a look, we've been above the baseline on this particular one for all this time. So really, if you're going to go back here, it goes back to, I don't have a date here listed, but it looks like it's going to go back at least towards the fall of 2020. So now, what's happened here? You know, we had all this movement up and it showed you every time it touched the 50 and the price touched the 50, it was another opportunity. Then we started to see the momentum starting falter, even though this was continuing to make new highs. And then all of a sudden we got a new high here. We tried it one more time. Look what's happening to the momentum. It's starting to wane. And then now we've broken down under the 50-day moving average, but we still haven't broken the Bollinger Band. So you may not have been completely convinced the move was over. But once we broke the Bollinger Band here, the price was still well above the 50. That would have probably given you a clue at least to raise your stop. And then look what happened. The 50-day broke down, the 200-day broke down. So now where we are in modern times, how can we use this Bollinger Band to decide that this is a position to get back into, even though it's under the 50? And that would be, first of all, you can see the width between the two Bollinger Bands right here. So that's going to show you now that it's possible that a big move is coming. Secondly, we're still under the Bollinger Band, so you would want to wait a little bit to see if it takes out the Bollinger Band. And third, we still want to make sure we maintain above the baseline or the zero line. So this is another opportunity to be looking at about the fact that how the momentum may start to actually show favor above the Bollinger, and you don't necessarily have to wait for this to take out that 50-day moving average. Another one is gold. Now again, look at this one. Now, gold is under the baseline and has been under the baseline pretty much since here. And also, by the way, had a death cross right after that, which means the 50 closed below the 200, which is a death cross. So everything was kind of in line with gold. Then we made this new low right here, and look at the momentum. It also made a new low. But now if we move over to just a few days ago, as I'm looking at this, the momentum went down, but did not go down as low as here. That already started to show you that maybe the momentum in terms of its decline was starting to show some signs of strength. Now you have a big up day followed by another up day, and look at what's happening with your momentum now. It's starting to take out the Bollinger Band right here after a period of compression. So what that tells me now is if this momentum can get back over, let's say this minus 601, at that point, gold could be trading all the way up here. And then the next thing would be to look at what's happening here with this 50-day moving average. We still have a negative slope as we do on the 50-day moving average. But obviously, if this starts to take out the 50-day moving average in momentum, that really could tell you that this might be a good investment type of tradable bottom in the gold. We'll take a look at one more from the long side, and then we'll look at one from the short side. So this is another one. This is Las Vegas Sands. So Las Vegas Sands is also, since this little blip down here, been above the baseline, right? You can see that it's been up and down around the Bollinger Band, but it's sitting right here on the 50-day moving average. So we don't really have much of a divergence. What we have here is a confirmation that even though this broke down briefly under the 50, this held the 50. So now, what you want to see in an instrument like this is that you want to see this momentum start to break out over this most recent consolidation. So you really want to see this get over, let's say, see it says 1816 in the gray there. At that point now, it's telling you that this true is going to hold the 50. You got an upward slope on the 50. You got a good slope here on the 50. And now if I were looking for any kind of confirmation in price, I would also want to see not only this take out that 16 level on the real motion indicator, I would also want to see this take out these most recent levels, which if you look at this here would be about 62.50. So this one is interesting because it's showing you that the price is going up before the momentum is, but it has potential. Now, if we take a look at one short, it's Budweiser. And in the case of Budweiser, you can see that this is broken down under the 50, but let's take a look at the momentum over time. It was trading above the 50-day moving average here as it was trading above the Bollinger Band and also the 50-day moving average here. And then look what happened here. It started to show weakness in momentum. Already it had really started breaking down under the Bollinger Band here as this continued to go up and made a new high here. Look at the momentum. The momentum had peaked out here. This was already showing signs of exhaustion. So there was actually a short potential in this even before it actually broke the 50-day moving average. And again, the real motion indicator broke before the price did. And now you can see that you had that good movement down. If we go all the way here where it broke the 200, notice what happened to the momentum here. It actually held. However, even though it held, it had a little bit of a rally here, never got over the 50, even though this did. And now look what's happening here. This is back under the 200-day moving average. It's sitting right on the Bollinger Band. It's also showing some signs here of weakness under the 200 here as it's breaking down under the 50. So that's would tell me that this would be a good potential short. So I hope that gives you some information again about how the momentum indicators could easily anticipate for you what could happen in the price. And with just a little bit of practice using the Bollinger Bands, the baselines, the slopes on the moving averages, along with the regular chart, you should really be able to have a good leg up in terms of the other traders out there, the public and the institutional ones, on what's coming, or at least what to avoid. Thank you so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.